online class. Today's topic is Indian financial system. First, we should know what is finance. Finance comes from the Latin word finis, means fund. It is most essential thing needed to start a new business. It is the lifeblood of the business. It has a broader term that describes two related activities: the study of how money is managed and actual process of acquiring needed fund. These are the two broader related terms involved in finance. Next is functions of finance. It has got certain function. First one is raising funds, investing them in asset, distributing return earned from the asset directly or indirectly, involving acquisition and use of fund. These functions are pervasive in nature, means throughout the life of the business it is present and it is a continuous and never-ending process. Next is what is financial system. It refers to the set of activity which facilitate transfer of resources from savers to the borrowers. Savers means those who have surplus money in their hand and they want to save in a certain financial institution, and borrowers are those who are in actual need of those funds. Next is, it is an institutional framework exists in a country which helps in financial transaction. Both cash and credit transactions are involved. It includes financial institutions, the financial market, financial instruments and financial services. These are the four strong pillars which support financial system. It deals with various economic units including individual institutions in money and monetary asset. Next is features of financial system. First one is organized and unorganized financial market. It has got both organized and unorganized financial market. Organized means those who are in control of RBI, and unorganized means those who are not in control of RBI. Next is, it regulates transactions between various economic unit. We know economic unit include individual and institutions. It regulates all those transactions, cash as well as credit transactions. Next one is, it provides linkages between depositors and investors, those who want to deposit their surplus money in a most productive channel. Next one is, it promotes efficient allocation of financial resources, means the available fund can be allocated and distributed to various profit-making instruments. Next one, it promotes economic development. When funds are allocated properly, returns are more, capital are raising, means it ultimately lead to economic development. Next one is, it facilitates expansion of financial market. We have got financial market is divided into two, that is money market and capital market. The available market and its instrument are to be expanded if we have got a sound financial system. Next one is role of RBI. You know, RBI is the Central Bank of India. It is established in 1935 under the provision of RBI Act 1934. Its headquarters are situated in Mumbai. Functions of RBI. First one is note issuing agencies, then banker's bank, banker to the government, lender to the last resort, regulates and supervisor of payment and settlement system, manager of foreign exchange, monetary policy. These are the basic functions of RBI. Next is, next in details, we can go see functions in detail. First one is issue of bank notes. We all know RBI has the sole right to issue currency and note, except one rupee note that is being issued by Ministry of Finance. Next is bankers to the government. Reserve Bank helps all the government activities are taken by Reserve Bank of India. As a banker to the government, Reserve Bank manages the banking needs to the government, both central as well as state government. All the banking, all the finance fund transaction on the behalf of government is done through RBI. Next is, it is custodian of cash reserves of commercial bank. This RBI hold deposit in this commercial banks hold deposits in the RBI and later has a custody of cash reserve of commercial bank. All the cash reserves maintained by the commercial bank are being deposited to the RBI. Next one is custodian of country's foreign currency reserve. All the currency all the foreign currencies are being in the custody of RBI. It is being taken care by the RBI to control payment. Balance of payment means all those imbalances should be avoided. Like we should form an equilibrium balance, that we should not go for over foreign currency reserve or shortage of currency reserve. It should be maintained in an equilibrium. We should get a balance that is being taken care by RBI. Next is lender of the last resort. When commercial banks are in need of fund and they have no other option to raise fund, they can at last they can go and approach RBI. Next one is central clearance and accounting system. All the central banks surplus cash reserves are deposited in the RBI, and all those clearing and settlement activity between different banks or multiple of banks can be done through RBI. All the clearance and account settlement are done in the account of RBI. Next one is controller of credit. All monetary and credit policies are controlled by RBI. This RBI maintains the flow of money in the country. So these are the basic role of RBI. Next we'll move on to role of SEBI. SEBI means Security Exchange Board of India. It is the apex institution for the security market, means stock exchange. Securities Contract Regulation Act 1956 and SEBI Act is 1992. SEBI act as a watchdog for the capital market participants, and its main purpose is to provide such an environment for financial market to facilitate efficient and smooth working of security market. To make this happen, it ensures that the three main participants of financial market are taken care of: issuers of securities, investors, and financial intermediaries. Mainly, SEBI is an apex institution for the stock market, and we have got financial market, which include both money market and capital market, which is being taken money market and capital market. And capital market is being taken care by SEBI, which is a stock market, and it has got three participant, that is issuer of securities, investors, and financial intermediaries. Issuer securities means the companies, those who want to raise fund, they can issue their stock or shares in the open market to the public, in the stock market, in the form of initial public offer. And the investors, those who want to invest their surplus fund in security market of different country, can approach them and buy their shares. And financial intermediaries, it acts as an intermediary between those issuer of securities and the investors for the smooth functioning of financial transaction. It can include a bank as well as all those broker involved in this financial security market. Next is its objective. It has got three objectives. First one is protection of investors, means first and foremost objective of forming SEBI is to protect the interest of investors. It should provide a healthy environment for the investors to participate and earn more return. Next one is prevention of malpractices. Any malpractices, any fraudulent activities are prevented by RBI and taken care by RBI. Any form of activities happen, and they are strictly prohibited, and as well as penalties are imposed for those who are indulging in those fraudulent activities. Next one is fair and proper functioning. SEBI is responsible for all the proper functioning of capital market, and there is a timely check for all the activities involved in secondary market, and it is regulated by SEBI. Next is functions of SEBI. It has got three functions. First one is protective function, next is regulatory function, and development function. Protective function means it helps in checking the price rigging. Basically, protective function is to protect the interest of investors and all those participants who are involved in stock market. First one is checking the price rigging. Price rigging means artificially pushing up the market price to a particular security is known as price rigging. We cannot artificially push a certain price of the securities. That is illegal. And next one is to prevent the insider trading. Insider trading means those who are having sensitive information regarding the stock market should not make some abnormal profit which is against the interest of investors, those who are not having that sensitive information. Next is to promote fair practices. Means fraudulent activities is to be prohibited. Next one is to create awareness among the investors. SEBI provide all those awareness needed for the investors to indulge in stock market and to make profit, as well as they make the investors aware of all those fraudulent activities which can happen through SEBI. And it also make awareness regarding the risk involved in the SEBI stock market. Next one is it prohibit fraudulent and unfair trade practices. Means all those fraudulent activities, unfair trade practices should be avoided, and proper penalties is to be imposed. Next one is regulatory function. These functions are basically performed to keep a check on the functioning of the business in the financial market. Means regulating all the functioning, all the activities happening in the financial market, both the money market and capital market. These functions include designing guideline and code of conduct for the proper functioning of financial intermediaries and corporate, regulation of takeover of company. Regulation of takeover of companies means any merging, acquisition activities and takeover of different companies are taken care by stock market. Conducting enquiries and audit of exchange. Any exchange activities, transaction are needed proper check and audit. Registration of brokers and sub-broker, merchant brokers, etc. SEBI taken care of registration of its members, middle market intermediaries such as brokers and sub-brokers. And then levy fees. Any activities, any transaction performed requires a charge, and it should be paid by the investors and those companies who are involved in. Then performing and exercising power, register and regulate, credit rating agency. These are all regulatory functions deal with SEBI. Next one is development function. SEBI performs certain development function also, that it include parting training to their intermediary, promotion of fair trading and reduction of malpractices, carry out research work, encouraging self-regulating organization, buy, sell mutual fund directly from AMC, asset management company, through a broker. AMC means asset management company. So these are the development function for the development of stock market. It gives proper training to their middlemen, their intermediaries, sub-brokers and brokers and all those intermediaries who are involved in stock market. Then they ensure fair trading and reduce malpractices. They take all those measures to reduce malpractices in the stock markets. Next, they increase reserve work in the field of security market. Next, they also encourage self-regulating organization. Then they also buy and sell mutual funds directly from asset management company or through a broker. AMC means asset management company. So this is all about functions of SEBI.